Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 12th of October. All right, almost losing track of the days there. Now, let's just have a look what's going on. The obviously North American holiday yesterday and Canadian holiday. It was always going to be a quiet session and lead into the week. Now, today is where the week really starts, right? So this is where you're going to sort of break things down. Not much change in the US bonds. Price is a little bit lower, yields up. Okay, equity markets, well, the US equity futures are down at the moment, and that's not really giving us a uniform price action here on the majors, right? There's a few things going on here that you sort of need to be aware of. Now, I'll come back and just run through the economic numbers coming out later today, but let's just have a look at the major currency pairs now. As you can see here, this is like a bit of a squeeze, right? That extra day where the North American session is off, right? There's less liquidity, so the markets can sort of work against the overall positions, and sterling's just sort of pushed through the top side. Aussie's taken out some weak stop losses above 73.50, and Kiwi also slowly squeezing to the top side. Not much action here in dollar CAD after Friday's move, but dollar yen. Now, I want to focus on dollar yen a bit. It is moving to the top side. Now, there's two major things. The dollar is tracking, like the yen is basically neutral, but the dollar is tracking the US Treasury yields very closely. Also, the big move in oil is putting further pressure on the yen. Now, Japan has no oil supplies, so that's going to really impact Japan, obviously, and that impacts the yen. So I'll show you that against the yen crosses. It's quite evident that there's a couple of things going on. It's like the perfect storm. So a big yen sell-off on the back of that. Dollar Swiss really cruising to the downside. And the dollar index, the overall dollar index itself, just trading to the top side. Now, we do have a number of things coming out, but with these charts, right, I'm just basically going through, and with that new high in sterling, right, short-term high, just moving that over. Now we've got the Aussie dollars breaking through a few levels here. Just need to really fine-tune these resistance lines. If anything, I like the top one the most. And if I just come back, I'll be looking to put that in play now. I'm sort of adjusting that primarily because it's so close to these other highs. It is the most relevant high we've got, if I just put it on the right spot. So you can sort of see exactly where that sits. And, well, Kiwi's got another one above here. So I'll be leaving that one there because that's the next level there as well. So just coming into this, right? So as I was saying, you come back over here. Now, there's a couple of things too. So just on these currencies, sorry, before I change pages, now, dollar CAD, right? The CAD is like the commodity currencies. I mean, obviously, commodity prices have been going through the roof. That supports the CAD, the Aussie, and sort of the Kiwi to an extent, right? So we are seeing some positive, well, just some solid groundwork. It's not like they're rallying against the dollar aggressively, but they are sort of holding their own ground. Now, if you have a look at also the bonds here, like the 10 and 30-year Aussie bonds, 1.7 and 2.52%. The Kiwi bonds, the 10 and 20-year there, still quite high. Dollar CAD also right up there. Now, these are up there with those US bonds as well, right? So it offsets a bit of the impact from the US Treasuries. We're seeing this flow into the other pairs. Now, when you look at, say, sterling and the euro bonds, well, they aren't looking so good. Right, so that's something to keep an eye on there as we go through the day. Now, as I said, like there's a bit of a double play here going on in on the yen. And if I just get that up, let me just share this one. So just having a look at the relative strength here of the yen against a number of different pairs. You can see CAD yen here, which is the purple one at the top. It's the biggest mover out of the yen crosses. Euro yen really lackluster at minus 0.63%, right? So that's a bit of a telling tale for what's been going on the dailies, right? If I can just clear my mouse up. If you have a look on the daily perspective, this gives you a bit more of an idea of the overall longer term moves on the yen crosses. Just wait for that to update. And as you can see there again, like on the dailies, the CAD yen is really rocketing. Right? That obviously makes sense because the high oil prices pushes CAD yen through the roof. It's the natural oil trade, right? Then looking through the rest of the pairs, you've got the dollar moving up on the stronger US treasuries. That's pushing dollar yen to the top side. And then you've got the rest of the pairs sort of fitting into line. It's interesting to note the some of the other pairs, like down here, there's still maybe some gold here. I know there's pressure on euro against the dollar. The euro yen possibly could catch up if we see some positive euro news there. Now, so just to, I mean, if you want to see that on a more visual aspect, check out the yen crosses here. You can see it shooting through the roof. You know, these moves never, I mean, they never last forever. But so, you know, and like me, I've actually missed a lot of all this move on the yen crosses. But what you can get is the move back down. So if oil starts to fall very quickly, or there's a reverse move on the dollar, especially those US treasuries, we're going to get the complete reversal in those two different dynamics. And you might want to keep a very close eye on all these yen crosses because they are hugely elevated. And I would expect, you know, at some stage, the slightest little impact can cause a big move, a big reversal there. So make sure you keep a close eye on the yen crosses. They are definitely getting to exaggerated levels. Well worth keeping an eye on. Now, just coming into Tuesday's trading, right? There's not much coming out here in the Asian session, but what we will have, we've got the UK employment numbers. Now, this is a bit of a handful like the non-farm payrolls. Now, it's not like the Bank of England are really rocking and rolling around with forward guidance on what they're going to do, but there has been a huge amount of hype on economic growth and stimulus in the UK. So we keep an eye on those UK employment numbers. There's got to be something in them if they are variant one way or the other. It's not exactly easy price action on sterling, but it's something you need to be aware of as you go through that session. The ZEW or the ZEW economic sentiment current condition numbers, a really good number to gauge what's going on with in the Eurozone. Once again, really strong numbers there. Euro yen might be the pair, not necessarily the euro. Excuse me. So, and that's where we are, right? US CPI numbers aren't until Wednesday, right? So there's nothing to sort of really do until we rock into those numbers. Until then, I'll revise those tomorrow. But right now, treat today, especially in that North American session where most of these moves are emanating from, as the start of the week, right? The start of the week's usually a little bit disjointed as the market reconnects. Volume will come back into the market. We'll see exactly what's going on with the dollar. And as I said, like you've got a bit of a risk-off profile here with the US equities just rolling over at the moment, but it's not a uniform price action across the majors. That's an alarm bell to let you know that all things are not equal at the moment. The treasuries are up. If anything, to me, the fact that we've had the long weekend is just really stalling things, and we're waiting for the next round of data, which is the US CPI numbers. Important to note, the volatility index is back sort of, well, around 20 or under 20. Means the market's not really worried about anything either, right? I've got to say, we're just going to keep a very close eye on the commodities. They are rocking to the top side, especially oil. That could be the key to the next big move on the yen. But you know what? If all the commodities start to turn down, we may see some downward moves on Aussie, Kiwi, and CAD. That means dollar CAD rallying. All right, so plenty to keep an eye on. And that's pretty much it from here at the moment. As I said, start of the week, you know, keep it real. You don't want to be losing too much cash. The US CPI numbers Wednesday. We've got retail sales in the US Friday, and there's a few other things coming out in the US during the week. That's where the action will be. Could lead us on the FOMC minutes, I should say, as well. Very important for that next leg of the dollar move. All right, guys, that's it from me. Have a good one.